October 8th, 2025, trade recap. This marks my first trade recap, not that I've ever recorded, but on this channel, uploaded to YouTube in particular. Essentially, I'm going to be doing a series where I go over my trades every day and I explain to you step by step on why I took the trade, what trade I took, and things I could do better in the future to help me out with my trading. Okay. So today we lost $204 taking two trades off of NQ. Going into the charts here, let's start with the high time frame and identify the bias for today, right? What I was looking for. So I have these lines right here, okay? This one in particular, I guess, whatever. Coming into market open, we had on the 4-hour time frame this very big bearish 4-hour gap, right? Same thing on ES. I just haven't mapped that out on ES just to keep things nice and clean, along with some Asia or previous session highs and lows. Most notably, this 4-hour low over here in Asia session, and this, I believe this is an hourly. These are hourly highs. Yes. Okay. We also have these relatively equal lows down here, which are on the 1-hour as well, on both NQ and ES, right? Going into the 1-hour time frame, we have this 1-hour gap stacked along with this higher 1-hour gap, both of them being bearish, right? Which is what mainly solidified my bias for today, which was pretty bearish. It wasn't incredibly bearish, but it was fairly bearish. Looking at the higher time frame again here, we do have a SMT that formed during Asia session, which is NQ sweeping out these 1-hour lows, whereas ES did not. We actually formed relatively equal lows on ES right over here. Now, scaling down to the 5-minute time frame, lower time frame, which is usually where I'm looking for trades. Today was a very unusual day, okay? The reason being is because of how ES moved in correlation to, or in comparison to, NQ. What usually happens, what I've noticed in my trading experience, is that they follow each other, right? They generally move in the same direction, okay? Either NQ moves up and ES follows along and moves up with it, or NQ moves up and ES, I guess, kind of consolidates or lags behind a little bit. Very rarely, and actually I believe this is my first time seeing this, or at least that I could remember, probably isn't, but very rarely does NQ or ES move in one direction, whereas the other pair moves in the other. What happened with market open essentially today. As you can see, NQ, 9:30, market opens, NQ shot straight up, whereas ES shot pretty much straight down. I guess you could call it sweeping out liquidity. I rarely see this happen, and I didn't really know what to do with that information. So there was a little bit of confusion there. But I just went along with it and went about my trading as usual. Now, what happened here? My trades were on NQ, so we are going to focus on NQ. As soon as market opens, within the first 2 minutes, we form a bullish 5-minute gap right over here, and we tap into this in both 4-hour and hourly bearish high time frame gaps, right? Having my bias be bullish, or sorry, bearish on the day I was looking for shorts. And my first trade was actually taken right over here. Let's see if I can find it. Nope, that's not it. Right over here. Okay, cool. Now, let me explain to you why I took this trade and what's unique about this trade in particular. So after we came into this 4-hour gap, we have a change of order flow on the 1-minute time frame, which is marked by this invalidation of this 1-minute gap. Okay. Now, I entered as soon as we invalidated this gap for 2 reasons mainly, right? Or I guess 3 you could call it. First reason being that we were bearish on the day. Second, we did retrace into a high time frame key level, and we did break order flow towards the side that I am targeting, which is shorts, right? We went into bearish order flow. Now, what makes this trade special is that this was a very low leverage trade. The reason being for that is because my setup hasn't fully formed. Now, what I like doing is, depending on how strong my bias is for the day, if it's not strong at all, I will not do this whatsoever. But I like to take or put some risk into the markets even though my trade hasn't fully formed yet. And that usually means hitting a high time frame key level, whether it's a liquidity, sweeping liquidity, or entering a high time frame fair value gap, followed by a 1-minute break of structure. Now, that isn't my setup. That's not what I'm looking for in a setup. But what I often see, especially lately, is we would go into that key level and price would shoot straight down without giving us a higher time frame confirmation, for example, on the 5-minute, which is usually what I'm looking for, right? So what I do by entering this very low leverage trade is I get some skin in the game, right? I have some risk onto the market. It's very low risk, but nevertheless, it is low risk just in case something like that happens, right? Where we shoot straight down and go for these levels, whatever that may be, without a 5-minute confirmation or without getting a optimal 5-minute entry. But it is low leverage because it is not my full setup. It is not a plus setup. It's not what I'm looking for. The odds are slightly in my favor, right? I would not take the trade if the odds were not in my favor or if I don't believe they're in my favor, but they're not as much in my favor as I'd like them to be. And what I like to do once I enter this trade, again, very low risk trade. On this in particular trade, I only entered in with 1 micro contract. Stops were even very low, which actually gave me the potential to have a very, very good risk to reward. 4.6 to 1. Wow, damn near 5 RR, which is very incredible. But for me to add on to this trade, which is what I like doing as the setup forms, is I would like to see a 5-minute break of order flow. Okay, whether that's a break of structure, okay, like we have right here, right? This is a break of structure, or actually, no. This is a break of structure, right? We are in bearish order flow on the 5-minute right here. We create a high, boom, followed by some lows, and eventually we close up, oh shit, we close up above this high right here. Okay, we actually don't close up above this high, so we don't break structure off of this. We break structure off of the nearest high. So we're looking for the nearest high to get taken, which is still actually this. Funny enough. No, that one was this one. Okay. Right. We close up above the wick of this high right here. Right. So a high is signified by a down candle followed by an up candle. That creates a high. Same thing with a low, right? This is a low. It's a up candle followed by a down candle. Or actually, sorry, down candle followed by a up candle, right? It's the opposite for a high. It's a down candle followed by a up candle, or anything in between. Okay. And we are, for a breakup structure, I'm usually looking for the most recent high or low to get closed above or below, right? So, for example, right here, I would not be looking for, I wouldn't consider this a breakup structure. Well, I wouldn't consider this a breakup structure because this isn't the most recent high. Okay, this is officially the most recent high. So we broke structure on the close of this candle right here, and not on the close of this candle right here. Okay. So going back, went off on a little bit of a tangent there, a little off course. I'm looking for either a breakup structure in the direction I'm trying to target, in this case being shorts. So I'm looking for a bearish breakup structure or an invalidation of a 5-minute fair value gap. And again, I am looking for a 5-minute, not a 1-minute change of order flow. 5-minute and above, honestly. So for me to add on to this trade, what I would have wanted to happen, or what I would have been looking for, is the follows. I would have wanted to have right after this, I would have wanted to have a gap come down. Okay. Next candle, be a bearish candle, have it close below this gap, and that's the key word, a close below. Okay. From there, that would signify a change of order flow on the 5-minute time frame. A bearish change of order flow on the 5-minute time frame, which is in line with my bias and the levels I am looking to take profit on and target. Okay, so as soon as we do that, I would have entered, in this case, with two more contracts, making a total of 3 on the trade. And then to finally complete the setup, I would have been either looking for a retracement okay, 1 second. So a 5-minute fair value gap to get formed. Okay, this is a 5-minute fair value gap. For us to retrace into this gap, right? And then once we come off of it, I'm looking for a change of order flow or a break of structure or an inverse fair value gap on the 1-minute time frame to signify a actual rejection or respect of that 5-minute fair value gap, right? So after we tap into this gap and we get a change of order flow on the 1-minute, depending on where that change of order flow is, I would have done my final add-on to the position, which in this scenario most likely would have been with one more contract on top of the 3 I've already had or already have on the trade, or would have had on the trade, making it a total of 4 contracts. Now, a lot of the times is what I see happen is we don't get this 5-minute retrace right here. Okay, and again, here's the thing, I'm not looking only for a fair value gap to get retraced into on the 5-minute. It could be equilibrium. So for example, this marks the high. We could have went up into equilibrium, which is right here, which is essentially the middle point of the move down. Okay. Could have went into equilibrium and then had the move down, right? Had the change of order flow on the 1 minute to the downside. That also counts as a 5-minute retrace in my eyes, or a order breaker block, but I honestly never look for those. I've never really looked for those. I don't understand them fully, which is kind of a problem, I guess you could say, is I should probably look into them a little bit, but for now, I don't really look for order or breaker blocks at all. Okay. Now, most of the time, or at least lately, what I've noticed is we don't really get all three things to happen right here. Okay. Most of the time, what happens is we get a invalidation of the 5-minute gap, and we just continue into the direction, of the invalidation, and we get no 5-minute retrace. That's what happened lately. It's not always happened. Before it was much better. From what I remember, we did have more 5-minute retraces, which gives honestly a better trade entry with a better risk to reward. But markets change, markets evolve, and you have to adapt with them. So this is what I got going on. Okay. Now, if all three things happened, I would have honestly even moved my stops lower, or my take profit lower, down to these relatively equal highs. Right. This is a very high resistance draw on liquidity, right? And it's outside of the previous sessions, which is why I wasn't necessarily targeting that with this first trade that I took. But if we had all of this confirmation, then I definitely would have had my final TP right here, with TP1 being over here at these hourly lows. But none of that happened. Okay, this is annoying. Sorry, give me a second. None of that happened, so we didn't actually end up adding onto the position. And since this position was very low leveraged, I only lost about $58 on this trade right here. No biggie. Move on. Not a big loss. Didn't affect me at all, pretty much. Okay. Now, here's where the second trade comes in, and here's where I broke my rules a little bit. Okay. So, as a part of my rule, I have to take a trade within the macro, which I got from TJR, which is from, oh, that got taken out, cool, which is from 950, okay, from 950 to 1030. That is the macro window, which is marked between this line and this line right here. This is where the move happens, right? Usually, market open from 930 to 950 is where the manipulation happens, where we see key levels get hit, liquidity gets swept, fair value gaps get tapped into to fill orders to make the move to the side that we want to make the move to for the day. And usually that move happens between 950 and 1030, or at least the first move for the day. Now this second trade was actually taken outside of that time frame or time window, which is where I broke my rules a little bit. but I did a few things to compensate for that, right? So the reason why we took, or what did I take this next trade off of, right? After getting stopped out here, we continue to shoot up, and when we go into this hourly gap, this is a 1 hour gap, and on top of that being the final 1 hour gap of this big move up, right? Oh, of this, sorry, not move up, move down, right? This is the final bearish gap getting filled. From there, we form a 5-minute fair value gap, and we actually invalidate this 5-minute fair value gap, which you can see right here, and it's a candle close below the gap. So from there, I go into the trade with only 2 contracts, right? And if this happened, the only reason I went in with 2 contracts, or 2 reasons honestly. First, or actually 3 now that I think about it. First of all, we were very extended on the day, right? After being so extended, there's a very low probability that we're actually going to come down and take out these lows and flip bearish for the day. Okay, that's the first thing. We have a lot of PD arrays, bullish PD arrays. There's bullish 30-minute gap, holding support, right? Second, it was outside of my trading window. Okay, so it was a little iffy. I'm not very familiar with price during this time. And lastly, we did already lose a trade. We already got stopped out on 1 trade. So if this happened, if we invalidated this 5-minute fair value gap, right, what I would have done, or if I didn't go into this low leverage trade first, and we invalidated this 5-minute fair value gap, and that was where I entered first, I would have honestly went in with 3 contracts instead of 2, but I only went in with 2 for those 3 reasons. And luckily for me, that I went in with 2 is because we got stopped out on this one as well. We lost a little bit more money on this one, around a little less than $150. Again, not a big deal for my account size. Did not risk much at all today. And this trade would have been more of trying to catch the retrace, right? So I knew more than likely we're going to continue moving up, right? And with this short, what I was looking for is to catch the move down to retrace, right? Whether it's a fill in this 5-minute gap that never got filled in, or to fill in this 30-minute gap right over here. If I can plot it out, boom, right? Or even this 15-minute gap right here. Hold on, let me get rid of this 30-minute gap because it's starting to get real messy. I can actually get rid of these now too. Okay, whether it's to fill this 5-minute gap, which is where I had my take profits, or this 15-minute gap right over here, which is where I actually had my take profit in the first place, right? So what I wanted to see here is a nice big wick all the way down to this final 15-minute gap to get taken, to sweep liquidity, to fill orders, and to continue moving up, right? Now that didn't happen. And you might notice, why did I have my take profit where I had it, right? I had it at the 50% line of this 15-minute gap. The reason is because, and what I've noticed over the times of me trading, over the years of me trading, over my trading experience, is that price likes to fill in gaps to at least 50%. Not always, but more often than not, and very likely, especially higher time frame gaps, right? So I would say 5-minute and above, likes to come in at least down to the equilibrium of this 5-minute gap, which is the middle of the gap. Now, another thing I've noticed is if price closes above the equilibrium of the gap right here, let's say price closed above this dotted line on the 15-minute time frame, then there is a high chance that this gap would get respected and would continue up. And what I've noticed is if we close below this dotted line, below equilibrium of this gap, so maybe we close around right here, is that more than likely, and not always, but more than likely, price will keep going down and invalidate this 15-minute gap. And again, I've mainly noticed this with higher time frame gaps. Price likes to, or tends to like to fill them either completely or at least to 50% to equilibrium. Whereas with 1-minute gaps, it's kind of all over the place, honestly. Sometimes it just gets barely tapped into and it continues up. Sometimes it completely fills it with a wick all the way down here, and then it continues up. So it's very random. But with these high time frame gaps, I noticed they like to get filled a lot more than the low time frame gaps. And yeah, that marks my final trade here. Right, so that's what I was targeting, is I was targeting equilibrium of this. Honestly, obviously, I would have kept a close eye on this trade, and I would have actually been on the 1-minute time frame. And if we didn't come all the way down to here, I probably would have manually closed it out, just because, again, this wasn't very certain. We were not bearish necessarily. We were just trying to catch the retrace down, which happened to be not that much of a retrace. And what happened is we just barely tapped into this 30-minute gap, just barely. And same thing with this 15-minute gap right here, this first 15-minute gap, we just barely tapped into it, which honestly, looking back at it, is what I more than likely see, is that the first 15-minute gap, or the first high time frame gap gets reacted off of when you are either super extended or super extended to the downside, I guess you could say, on the day already. Rarely does it actually go in to take out the final set or the final gap out of the set, which I was hoping for here, and it didn't play out. But that concludes the trade recap for today. What I could have done differently, honestly, is definitely shouldn't have taken this trade right here. It was outside of my trading window. We were obviously very extended. And if anything, I should have flipped my bias and looked for longs, which would have been a safer bet, in my opinion. Maybe, I see one right here. Boom, right? So we come into this 15-minute fair value gap. We don't really break bearish order flow, we don't really break 5-minute order flow. We tap into this fair value gap. We close up above this inversion, and we retrace down to this 5-minute gap right here. Let's get rid of this 5-minute gap right here. What happens? We come down. We actually go into bearish order flow on the 1-minute, which tends to happen during retracements of higher time frames. Okay, tap into this gap. From there, we break order flow, and we go from bearish on the 1 minute to bullish on the 1 minute via this inversion of this 1 minute gap, bearish gap. Honestly, if I was really wanting to take a trade, it should have been a long right here. Crap. Like this. Honestly, like this. Okay. Stops being probably right around here. And then the take profit being at these highs right here, or slightly below is what I usually like to do, just in case. And, you know, funny enough, this actually would have hit full take profit for a 2.7 ORR. This isn't my first time recording this video. First one was, I didn't like the audio. My mic was too far away from my mouth, I guess, and it kept muting and going in and out, and it sounded like garbage. You couldn't follow along at all whatsoever. So I decided to re-record this video. And when I was recording this video for the first time, I actually mentioned this, right? And it was before we actually ended up taking out this high, or all-time high right here. And lo and behold, we actually took out this high, and we actually might flip bearish now, since we took a very high, or took out a very high resistance to liquidity. But yeah, that concludes the trade recap. Now, for a little bit of extra sauce, I know this video is getting long and all, but something I've noticed here, and I noticed this today, actually, and I completely stumbled upon this by accident, because, so, for a little bit of context, what I like to do is sometimes I go into a trade, but I have to go away from my computer. And since my broker, or my prop firm, Topstep's interface is completely garbage on mobile, on the phone. It's too small, it's hard to read, it's hard to do anything really on it. I like to map out my trade on TradingView and monitor it that way, and just only execute orders on TopstepX. If I have to close a position, cancel a limit order, things of that nature. But for monitoring, I really like TradingView. Only thing is that I don't look at TradingView every day, because there are some days where I can be on my computer for the whole, during the whole trade, right? The length of the whole trade. And my drawings get left on TradingView unattended, right? And so what I noticed today is, this is from Friday, right? I want you to take a look at this gap. Yeah, this is from the trade on Friday. Okay, so this 5-minute fair value gap right here, this is the gap that got retraced into and rejected off of to make the move, which is actually, this is a trade I took, but to make the move for the day on Friday. Okay, we got our manipulation right here, whatever that may have been, I'm not entirely sure. And then rejection, and then the retrace right here into this 5-minute gap. Okay. Now, even though this gap was already retraced into, and we invalidated it, and it was actually from next week, or last week, looking at this gap, it's holding, prices reacting off of it, right? In some way, shape, or form. Now, again, I just noticed this, so I'm not too sure how to use this or exactly what price is doing off of this, and I don't know if it's just a coincidence, But it's hard to call this a coincidence because, I mean, look at this, right? This gap still holds some decent value, okay? It's still, I guess you can almost call it a key level, right? Prices reacting off of this gap. 1, 2, 3, 4, 5 times, right? And this is on to the next week. I mean, this is where we, this is Friday, okay? This is Sunday market open, and this is Monday. So we're reacting off of a 5-minute gap, an old gap that was already used and invalidated onto the next week. I'm not sure why it still holds value. I'm not sure why price is reacting off of it, right? And you can even see it right here, even after on Tuesday, after getting completely disrespected, we're still doing some shenanigans off of it, right? I mean, we're not doing much. Kind of just bounced around this gap right here today. But I mean, I guess you could say we were bouncing around this, instead of bouncing around this 5-minute gap, we were actually, 1 second, reacting off of this 1-hour gap? No. Oh, actually, wait, let me see. And I'm learning as I go here, live for you guys. Yeah, no, not the 1-hour gap. This is still the 5-minute. Let's take a look at this 4-hour gap here. Okay, now it's a little different on the 4-hour gap. I guess you could say we were bouncing around this equilibrium of this 4-hour gap. But again, not really. Because you can see right here, never hit equilibrium. Kind of did a few rejections here. So it looks like an important gap, right? From that is even old, still holds value, right? The reason why this gap was important is because this was the gap where the retrace happened and where price rejected off of to make the move up. And it kind of makes sense, right? Since price rejected off of this gap, this is kind of seen, I guess, as a valuable area or a favorite area to put orders in. But it's very strange, and I'm not entirely sure on how you would go about using this. And honestly, I don't know if I'd be mapping it out necessarily while I'm trading, just because it just adds a lot to the chart because there were so many high value gaps that have happened before that we could be potentially reacting off of, but it would just clutter the crap out of my chart. And I'm not really too familiar with this because, again, I noticed it today. I mean, I've noticed it in the past too, but I really put some thought into it today for the first time. And I'm trying to see what we're really doing here. But that's for me to do some more research on and for me to look into a little further. I can't say anything definitive about it right now, so I'm gonna leave it at that. But there is again, today is October 8th, 2025. That is the trade recap for today. I'm gonna continue with this series every day, honestly. This series in particular, I'm gonna be uploading more than just trade recaps on this YouTube channel, but this series in particular, trade recaps are more for me to use as a journal. I personally hate writing down my trades. I notice things much better, much more easily when I'm explaining it to somebody, whether that's a camera, whether that's another person, than when I'm writing it down. When I write things down, I tend to notice that I'm very robotic with it, and I write down exactly what I have to write down, and I don't really think about what I'm writing necessarily. Whereas when I'm speaking, I actually put some thought into it. That's just me. I've never really liked taking notes in class. It's always been, if anything, uh, a bottleneck when I take notes, just because I'm more focused on writing than actually listening and trying to understand what the teacher or professor is saying. So this is just my form of journaling. I will be journaling every single trade. I will try to journal even days where I didn't trade, right? See what I could have potentially done, what I potentially could have entered off of. Maybe again, there's always things I miss while I'm actually trading. So for me to look back and explain price for the day is very beneficial to me because it's going to help me see the things that I've potentially missed and use that to my advantage. Keep those things in mind for the next trading day so I can become better. Um, Again, I will continue uploading to this YouTube channel. It won't be just trade recaps. I'm actually going to upload another video today. It's probably going to be a something along the lines of daily routine of a 19-year-old day trader, something like that. I'm not entirely sure, but there will be another video coming out, and that is more for you guys and less for me. Um, this is mainly just a reflection. I'm not gonna put too much time and effort into these videos necessarily to edit them or anything like that. But I am going to put in more effort into production quality for this YouTube channel in general, as well as my TikTok. I do need to get a better mic. I do need to get a webcam. My old webcam broke, which is honestly fine because it was garbage anyway. And I needed to get a new one because it was horrendous. It was trash. It was utter garbage. So, yeah, that concludes the video, the trade recap. I will see you guys in the next video, hopefully. You guys have yourself a great day.